We have some phenomenal news for everyone that loves weekly passive income. If you are a dividend fanatic like I am, you're going to really love this. We have RoundHill's first fund of funds. Now, what they're doing, they're compiling all of their WeeklyPay ETFs into one fund called WPay. A very smart ticker and a really cool idea. So, we're going to break down this fund, the announcement, talk about it, talk about what I think, and look at the performance of all of the other WeeklyPay ETFs year to date, or since their inception. I'm really pumped for this one, and I hope you guys are as well. If you're interested in weekly dividends in passive income, you are in the right place. Don't forget to like the video and to subscribe so you never miss the future free updates and know what income investors are buying. Let's roll that intro. I have to start out by saying I think it was very, very intelligent of RoundHill to listen to the people and create this fund because there were a lot of people asking for it. So we're going to break it down. Now we're looking at Beat the Bots on X or on Twitter. Go check them out. It's a really good page. And we can see that it's coming soon. WPay is not trading yet, but it will be hopefully relatively soon. And what's different about the weekly pays versus the weekly payers? This is some confusion I think a lot of people are getting. WPay is only going to be all of their weekly pay ETFs. And again, there's a difference between weekly pay and weekly paying. It is very complicated. I don't know if it was the best name to name them weekly pay, but there are 15 weekly pay ETFs that utilize leverage at a 1.2x. There are other weekly payers that we've seen for a long time, like QDTE, XDTE, RDTE. All of those are weekly paying, but they're not weekly pay. They're not utilizing leverage. Those ones use 0 DTE calls, and the others use a mix of options. So, very interesting already, but the breakdown is pretty simple. The WPay ticker is going to track the weekly pay universe index. It's an equal weighted benchmark of all the RoundHill single stock weekly pay ETFs. It's going to be rebalanced every single month, and one ticker is going to give you exposure to the entire weekly pay lineup. So I think this is phenomenal. You can see there's more points on here, but I'm not going to get too deep into the details. What we're going to do now is look at the weekly pay roster. We're going to see what's been performing the best. They typically release these in increments of 5. So we've had 3 different releases, totaling 15 different underlying stocks. Some have done really well. Some have done, unfortunately, fairly poorly. But let's take a look. RoundHill definitely knew that they were going to have a lot of eyes on the website. They added a bunch of cool graphics and such, and it looks amazing. Now, I am a fan of RoundHill. You guys can probably tell that. Maybe I'm a little bit biased, but I've seen a lot of impressive things coming from this company. And as the guy that tracks all the weekly payers all the time, the returns have been amazing. But I wanted to break these down because they are different than normal income ETFs that utilize options, calls, puts, and such. So the goal behind these, it's relatively simple. If you are long on any of these ETFs, they will basically pay you a dividend to hold it. And that's what it comes down to. Even if it's technically not a dividend, a distribution, whatever you'd like to call it, you are getting paid based off the returns of the underlying. So what does this mean? Does this mean you should hold all of them? Not necessarily. It depends on what you think is going to do well. So we can see all the funds they have. They have Apple, they have AMD, they have Amazon, Avgo, we have BRKB, Berkshire Hathaway, we have Coinbase, we have Google, Robinhood, Meta, Microsoft, MSTR or Strategy. We have Netflix, Nvidia, Palantir, and Tesla. Again, these were all released at separate times in groups of 5. But for me, one thing that I really like is I am long on Tesla. I think it's going to do well in the long run, over the next decade even, but it's volatile. So I don't think the Tesla weekly pay has done as well as a lot of the others. Nvidia is another extremely popular one that has been doing really, really well. We have a lot of Nvidia funds, but if you want just some exposure to Nvidia at a 1.2x leverage, which you're comfortable with, great, there you go. That's what they are providing with this. It's a function of income while also kind of being a growth investor. And it's very, very unique. And they've had a lot of success with them. Specifically, their best performer, I believe still, is PLTW, because PLTR has gone nuts, going from what, $80 to $160 at one point, absolutely continuing to push to higher levels. And thus, the people that held PLTW were raking in some crazy dividends and some overall really solid price appreciation. We do have to touch on leverage. These are 1.2x, meaning you're getting 120% of the stock's weekly performance. And that, again, is paid out in the distributions. But leverage isn't for everybody. Now, I like a little bit of leverage. 1.2 is amazing to me. I would even be happy with 1.4, but some people aren't. So these may not be the best ETFs for everybody, especially if you're really risk averse. But like I said, I'm not. And I'm long on a lot of these underlying stocks. So I have no problem utilizing risk to make me more money. And that's what I think RoundHill is doing really, really well, because I like that idea. I think it's very, very solid. Now, what I will be doing a new series on all the WeeklyPay ETFs, including WPay. The reason I've stopped doing that recently is not because they haven't been interesting, but my dividend tracking spreadsheet, the one I had created for the channel, is not populating the newest tickers. So it has the first 5, but the last 10 are not populating, and I reached out. It's not the developer. It's nothing we can do. Excel is not inputting the data yet. So I've complained. I've spent hours with tech support trying to get them to work on this, and it's supposed to happen with the next update, but only time will tell. I hope it happens very, very soon, because the dividend tracker has been amazing for these, and I love making the content on it, and it keeps it organized for me. Plus, if you like the weekly dividends and you want to know exactly what you're making every week on what, then that's what the weekly tracker is for. So I will be putting those out very, very soon as we get the good news from Microsoft that it is out. It's still available for purchase now, but you can't use it for just the last 10 weekly payers. So don't get disappointed. Again, it will be fixed. Using dividendchannel.com's drip calculator, we're going to go through each and every one of them. Now, I'm only going to relate them to the same ones they were released with, because it wouldn't be fair to put NVDW against one of the newer ones that hasn't been out for as long, but we can see the returns that they've had since inception. So AAPW has been one of the worst performers. It's down over 10%, which is not great. But NVDW has been doing really well. With dividends reinvested, your total return with NVDW would be 26.94%. With AAPW, you'd be sitting at negative 10.75%. Now, like I said, I'm a fan of NVIDIA. I think it's going to keep going up, and thus it's simple to have a little bit of leverage with it, but that is just my opinion, all right? Don't go quoting me. This is not financial advice. I just think most of the time the stock market goes up, and when it goes down, I simply buy more. So I'm a little bit bummed with Apple's performance, but Apple's getting pretty big. It's hard to expect some crazy growth out of a company that size, and I do think they've stalled a little bit, whereas I think NVIDIA is going to keep on pushing. I think semiconductors, I think AI, everything is going to be pushing that company forward. So not bad, but let's check out our next two. I'm also working on another project. I should say a developer is working on another project where I'm going to be able to do the drip calculator with many more than just 2 of these at a time, to make it a lot simpler. But until then, we're going to keep using dividendchannels.com because it is very good. So PLTW versus COIW, 2 amazing performers. PLTW is the best performer I've seen of the weekly payers. Of the original 5, I should say. Who knows how the new ones are doing? We can see total return 43.79% with dividends reinvested, and COIW 18.83%. There was a point when COIW was doing better than PLTW almost significantly, but unfortunately earnings dropped it down heavily, and I was left with quite a hole in my account because COIW was a good portion of it. It was doing really well, it was well in the green, and then it fell into the red, but it is bouncing back now, and I'm still liking some of the returns that I'm getting. So PLTW is still good. COIW falls below even NVIDIA, but we still have one more to look at. TSLW is actually doing worse than Apple at this point, which is embarrassing, down 12.36% with dividends reinvested. Not great. Definitely disappointed in how Tesla has been performing, but again, long-term, I think it will be fine. I wish I had bought more on the dips, but I am still well in the green in my position. Now on to our second batch of released ETFs from the Weekly Pay series, the next 5. We have BRKW and METW. BRKW has gone pretty much flat. You would be up 0.19% had you invested $10,000 at the inception of the fund, and METW, you'd be up 9.37%. Very solid. I think Meta is an interesting one. You know, they have Instagram, they have so many different sources of revenue. There is still a large percentage of the population using both Instagram and Facebook, even if it does seem to be for an older demographic now than what they were targeting. Who knows how they will handle in the next decade, but I would assume they're going to keep doing well. I mean, the numbers don't lie. They've been performing really well. And with advertising and whatnot, it's crazy how much money these companies make. BRKW, lackluster, but it's not going to be the best performer. I would never assume that one would be. It's a slower growth play, and it's Warren Buffett. So if you're a fan of Warren Buffett, boom, there you go. That one would be a no-brainer. Next, we have NFLW and AMZW, Netflix and Amazon. NFLW is in the negative, down 2.52%, where AMZW is up 8.13%. This is pretty astounding to me. Netflix has gone absolutely ballistic. Just hasn't been too great the last couple of months. But all in all, look at the chart. I wish I had put so much more money into Netflix post-pandemic when everything was down, because the returns have been crazy. Don't believe me? Look at the chart. Then we have AMZW. Again, a very solid one. A little kind of similar to Apple, but maybe a little bit more growth potential, in my opinion, just with the leadership and especially with everything expanding with drones and all the other things that Amazon's involved with. I'm a fan. I do own the stock, so maybe I'm a little bit biased, but pretty good return, 8.13%. Cannot complain. That leverage definitely helping. Next, we have my personal favorite WeeklyPay, HOOW. Now, I'm comparing it to PLTW, which has been amazing still, but during the time frame of HOOW's launch, only 2 months, it has significantly outperformed, and PLTR has kind of pulled back a little bit. Now, HOOW since inception is up 46.63%. This is why so many people are talking about the WeeklyPay ETFs. That return is outstanding. Annualized, if it was able to keep that up, is it going to? Probably not. You'd be sitting at a 261.87% annualized return. A lot of money in dividends, and Robinhood stock has just been going ballistic. But again, if you think long-term, Robinhood stock's going to keep doing this, you can kind of swing trade this style of ETFs. And they even say that. They say on the website, you don't have to hold them forever. It's based off of what you think is going to do well, even if it's in a short-term time frame. But still, very impressed with Robinhood's performance. I'm not the biggest fan of the stock, but because HOOW is doing so well, I have to credit Robinhood itself. Now, is it going to keep going? Only time will tell. But still, love the dividends we've been getting. And on top of all of that, the hype built around Hood stock with HOOW is definitely pushing it higher. Now we have 5 more weekly payers, the newest of the group. The first 2 of this group, AVGW or AVGO, and AMDW or AMD. So I'm a big fan of AMD. These ones have only been out for a month. The dividend calculator or dividend channels calculator is not calculating dividends yet. So this is without drip on, and it's down 2% for AMDW and 3.14% for AVGW. Long term, I think both of these will do well. I'm a big fan of AMD, and who knows? It all depends on what you think is going to do well, especially in these markets that we are in now. We're still very, very, very green for what we've been seeing, and we could be due for a pullback. Maybe we're due for another run. It seems like the market's going to do whatever it wants to, and only time will tell. Now on to our next 2. GOOW is up 4% and MSFW is down 3.57%. Again, only a month of trading, so we can't really base a lot off of this, but I think Google long-term, one of the Mag 7, it's going to be fine. Same with Microsoft. I think Microsoft is probably a little underrated even. It's so large. I think it's the second largest market cap company now, which is amazing. It's huge. It surpassed Apple, and they're going to keep doing that. They have so many different, ways of making money, whether it be cloud services, and you have all the Microsoft tools, you have all their tech, amongst so many other things. So one of the largest companies, one of the most well-known companies. And again, I use their software daily. So let me know what you guys think. We still have one more choice we have to talk about, and that is MSTW. It was another terrible time to start an MSTR fund. MST tried, and it was a bad time. Everything seems to be going wrong for MSTR. I think the hype has died down. I think Misty has fallen off a little bit. People are realizing the implied volatility is not what it used to be, that it's not going to return 300% in under 2 years again. That's just my opinion, not financial advice, but that's kind of what we're looking at. So can't really complain about this one. If you bought it off rip like a lot of people did, I'm sorry. It's been bad, down 22.5% so far. Hope it rebounds. I definitely think MSTR is not going anywhere. Bitcoin's been a little bit rocky as well, which does influence the overall price and sentiment with MSTR, and thus every single fund. You have MSII, MSTY, MST, now you have MSTW. There's another one in there too that I'm not even thinking about, but people still love it. There's definitely still like the Misty Mafia. People are going to, stick with it no matter what. And I hope it does well for them. I wanted to show you guys with the instances of the market doing well, you will outperform the underlying, right? So we see that with HOOW versus Hood. So Robinhood stock is the underlying, HOOW is our ETF. You have a 46.63% return total with HOOW with dividends reinvested versus Hood's 39.53. And this isn't the only instance of that. We have the same thing with PLTW versus PLTR. So we can see they were close, and PLTW barely ahead by about 2%, but still it is beating the underlying. Very interesting because we don't really see that with a lot of like SPYI, QQQI on the markets. We don't see it with a lot of other single stock, even, I mean, with leverage you do if they're performing a certain way, but it is pretty rare for income ETFs to outperform their underlyings. So I think it's impressive, and I think it's important to note. Now, I hope you guys enjoyed this video, and I hope you guys are as excited for WPay as I am. I'll be putting some content out about it as soon as it hits the market. So stay tuned. Don't forget to like and subscribe. And if you liked this video, check these out popping up right now, including a no NAV erosion ETF grouping. You're going to love it. Check it out. Let me know what you think. Don't forget to like and subscribe, and I hope to see you in the next video.